Good afternoon, ladies and gentlemen. For reasons that I'll explain, we're keen to start and finish good to time. I'm sure you'll be pleased to know. I'm off to have my COVID booster jab immediately after this talk, so hence the need to keep fairly strictly to time. By way of introductions, my name is Geraint Lewis, and myself and my colleague Debbie Jenkins will spend the next hour or so just talking through some topical VAT updates and tips for the not-for-profit sector. I suspect some of you in this webinar will have dealt with myself or Debbie before, or will have heard us speak at various MKS events, but by way of background, first of all, you have to put up with an entire hour of Welsh accents. I apologise. There is no alternative in this particular seminar, as both Debbie and I hail from South Wales. But we are both VAT directors here at Moore Kingston Smith. A long time ago, we were both VAT inspectors, but please treat us nicely and gently. It is a long time since we gave up doing that particular thing for a living. So in terms of format, we're going to split this up between myself and Debbie, so we will switch back and forth. There is provisions for questions. We're going to try and do that at the end, if that's possible. So if anybody's got things they want to ask during the presentations, can I ask that you put them into the comments box or the questions boxes on the system, and then we'll sort of circle back and pick them up at the end. Could you put us the next slide, please, Molly? So in terms of what we are going to cover this afternoon, we've basically got four headings. One is sort of, I'll talk a bit about online and digital sales, which are becoming, I think, an increasingly important part of everybody's lives these days. Then I'll hand over to Debbie to talk about some presentations, issues with presentations like this one, virtual conferences, events and products, and that's looking at some new European legislation. Then we've got the changes that are happening to publications, journals, books, etc. And finally, I have broadened the last topic somewhat. It is about more than partial exemption, honestly. I'm going to have a little look at some of the things that HMRC have done in the wake of the pandemic, I guess is the phrase you're using now, although looking at the numbers for people affected and certainly knowing people in my circle of friends who seem to have come down with a dreaded lurgy in the last couple of weeks. I'm not sure that's the appropriate phraseology, but really looking at the thinking HMRC have applied to dealing with some of the challenges that the pandemic has produced. And I think that's it. So if you just spin it into the next slide, I shall start without further ado on online and digital sales. Thank you, Molly. Okay, so obviously over the last 2 years, more or less now, we've obviously seen a complete sea change in the way in which events, seminars, conferences, etc., are organised, as demonstrated by this afternoon. I don't think I've done a face-to-face presentation since probably late 2019. I know Debbie did one about a month or so ago, but you know, we've all been forced to reevaluate how we do these things and the move to an increasing amount of digital events. And certainly what I'm now seeing as well is I'm being invited to a number of hybrid events where there is a physical attendance option, and also you've got delegates attending electronically. So that move has created some interesting challenges and some changes for the way in which VAT is dealt with on delegate fees, advertising, and other things. So we'll start with the sort of physical stuff. So I think it's fair to say that physical events for charities, particularly where those events are held overseas or where there are a significant number of non-UK attendees at a UK event, have always been something of a challenge. And that's because VAT is due in the location where the event physically takes place. So if you had historically, and indeed still have, a conference, let's say, that takes place in Madrid, then even though most of the people attending that conference may not come from Spain and you are a UK charity, the delegate places are going to be subject to Spanish VAT unless the event qualifies for exemption, possibly as education. And just an aside there, what you are interested in terms of the potential for exemption is not the UK legislation around the exemption for education, or educational events, I should say, but rather the equivalent legislation in Spain. And I would say from past experience of dealing with a number of sort of international charities, those exemptions are not the same. So the UK, historically, when we were all in the European Union, the UK had a relatively wide interpretation of what education could include, and there were an awful lot of conferences, seminars, symposiums, etc., which were broadly educational, as in the transference of knowledge, which the UK was happy to treat as exempt education. A number of other member states, Spain being one of them, has a far more restrictive definition of what is education, and it is harder for something that is not a structured series of lectures and tuitions, and in other words, a course of education, to qualify as exemption. So that's something to think about. And similarly, if you've got foreign delegates coming to the UK, we quite often get queries from our clients, both in the not-for-profit sector and the for-profit sector, where they've got people coming to the UK to attend a conference who said, well, I'm coming from Germany or Spain or whatever it is, you don't have to charge me VAT. Well, you do, because the place of supply is where the event takes place, again, in the UK. Now, that's been the status quo ante for, let's say, 20 years, more or less, and has been a battle for a number of charities and other not-for-profit organizations over the years, with the people having to register in other locations, which can be expensive and time-consuming, particularly as the turnover limit generally for registrations in these circumstances is 0. But if we then move to online events, this has opened up a whole new dynamic in terms of how the VAT is treated. So if you just flip along the slides, that would be lovely. Thank you, Molly. So what we're looking at here is the very different rules that apply to the VAT treatment of what I would broadly describe as online or virtual events. So the first question you need to look at here is, who are the attendees? So there are different rules for B2B and B2C customers. So I'm going to concentrate, first of all, on the position for B2B customers, and just pausing there for a moment, particularly in the context of not-for-profit organizations. Business to consumer transactions don't necessarily mean that you're dealing with private individuals. It means you're dealing with an organization who is not in business. So you may well have attendees at your event from charitable organizations or other not-for-profit organizations in Europe who are not there as private individuals. They are there to represent an organization or a trust or whatever it happens to be. But because the entity they're representing is not a business person, it is still classed as a business to consumer transaction, not a business to business test. So as I said, let's look at the business to business test first, because that's relatively simple. Where the delegate attending an event in the UK, or indeed elsewhere, but let's use the UK as an example, where the delegate attending an event in the UK is there in a business capacity, then VAT is not due on that charge. UK VAT is not due on that charge. The obligation to account for VAT essentially passes to your customer, and the customer accounts for the reverse charge. Now, there are two things to bear in mind when you're looking at that particular scenario. The first of all is, where is the customer located? So the fact that the delegate you're hosting comes from, let's say, Belgium, doesn't necessarily mean that your customer, i.e. the business, is based in Belgium. So the question is not where does the delegate come from, but rather where is the customer? But by and large, it's relatively simple. What you're looking at is where does the customer belong? When, however, we're dealing with B2C transactions, it becomes somewhat more complicated. Although some of that complication has perhaps eased a little bit as a result of some changes on the 1st of July to the way the European Union taxes electronic services or services provided to certain individuals, and Debbie will come on to that later. But the first question is this a live event? In other words, something like this, where people are tuning in, listening to somebody, talking to them in real time? Or is this a essentially automated event where perhaps people are listening to pre-recorded speeches, or where they are simply interacting with other pre-recorded material? And the reason that certainly was important and still is part of the consideration is that the real-time stuff, so people like this, once again, you're into the stage that could well be education. You also have the fact that that is not an electronically supplied service, which was very helpful, albeit is less helpful now, but is still something that you need to consider. And the other question is that having established what this is, you then again need to understand where your customer is located. So for private individuals, working out where your customer is located is more challenging. Now, typically in a service that is provided virtually, you are looking at using something like their billing address for the invoice you sent them, credit card details, so again, the address linked to the credit card, or their IP address as evidence of where they are located. Now, the point of all this, if you take the next slide, Molly, is for these events, you need to consider, as I said, the place of supply rules. And the point is you are looking at a service which is supplied for a B2C audience, essentially where the customer belongs. So if you are providing a seminar and you have 5 delegates from Germany and 5 delegates from Austria and 5 delegates from the UK and 5 delegates from France, the attendance fees to that seminar are going to be subject to different rates of VAT by reference to where the customer belongs. And again, Debbie will talk shortly at more length about how that is done via a new system called OSS. Some of you may remember something called MOS, which was the mini one-stop shop, which was how the European Union taxed digital services, which came in about 5 years ago now. That scheme has been widened as of the 1st of July for B2C services. And Debbie will talk about that in more detail. But again, it involves declaring VAT in multiple jurisdictions. Finally, and this can be an issue for both B2B and B2C customers, is this question of a use and enjoyment test. There are certain specific types of service, of which electronically supplied services is one, which is why the question of whether or not this is a live event or not remains important, where you have to consider a use and enjoyment test. So if I give you a practical example, if you were to run a virtual event, let's say, and an organization based in the US were to book 5 delegate places at that event, then your starting point, all of the things remaining equal, would be that that service was not subject to UK VAT because your customer was based in the United States. However, where that service is used and enjoyed in the United Kingdom, it would be subject to UK VAT. So if out of those 5 delegate places, 3 were used by employees of that particular organisation who were based in the United Kingdom, then the use and enjoyment test would dictate that UK VAT would apply. Now, quite how in practice you would ever know that, and I've asked this question to a number of people who are far more knowledgeable than I am about how these events are done, seems to be uncertain. One of the suggestions that has been proffered to me, which I think is actually quite sensible, is to demonstrate to HMRC that you're addressing the problem simply by having within the terms and conditions for the delegates that it is the responsibility of your customer, i.e. the American company in this, or the American organization in this case, to tell you if any of their delegates are based elsewhere other than the United States. Clearly, if they don't do that or don't remember to do that, you cannot really be held to blame. You've done everything you possibly could to cover that off. I think that is an interesting, practical and sensible way to get around the problem. At which point you've had more than enough for me, and I will pass over to Debbie, who I think, if you want to slip to the next slide, we will talk about digital publications.
Lovely, thank you, Geraint, and good afternoon, everybody, on this cold, crisp day. Welcome. Okay, let's talk about digital publications and good news. You may be aware that from the 1st of May last year, the zero rating that applies to physical printed matter, which had been in line to come in on the 1st of December 2020, was actually brought forward to the 1st of May. So what that means is where we could only have zero rating in the UK for physical books, publications, leaflets, etc., that was extended to the digital versions. So for example, if you had a PDF of articles of your journal, of your magazines on your website, and somebody could buy that, then both of these things are now on the same footing. So the physical and the online version are both zero rated, which is good news. There was a challenge which was going on, if you like, in the background and not directly relating to this HMRC chain, by the News Corporation Group that wanted to achieve the zero rating, backdated for their online version of the Times, etc. They have failed again in their appeal. The grounds were there was no digital version of newspapers back in the 70s when zero rating came into the UK rules and regulations, and that there shouldn't be any difference. But the Court of Appeal ruled in favour of HMRC and said, sorry, the online is a service, the in your hand newspaper is a good, they are not the same. So News Corp is looking to appeal, get a permission to appeal to the Supreme Court. The key point here is, if they are successful, is there an opportunity to take the zero rating of digital back prior to May 2020? But as things stand, and HMRC issued the Revenue Business Brief earlier this year, this opportunity for zero rating only applies from the 1st of May last year. I mean, the key point, and we've heard again a lot about the EU, and we will hear more of it after, if I use the B word, the Brexit word, which will be used probably a few more times today. Zero rating is only available in the UK. So there's a lower rate of 5% generally in the EU, and we indeed have it, as you're probably aware, for certain things, but the zero rate of VAT can only apply in the UK, which is if you're selling physical printed matter overseas, then when that goes overseas, it is not zero rated in the country where it arrives, and I'll go into that in more detail in a moment. If you could click to the next slide, please, Molly. Right, so what's the practical considerations of these? Well, one of the things that I've been working on, and I'm sure Geraint as well, and maybe some of you people on today's webinar, membership benefit packages. So if you're offering a benefits, maybe paid for subscription, learned society, etc., and you pay your single benefit amount and you get a package perhaps a magazine coming to you on a quarterly basis. Perhaps that also included the PDF version. Perhaps it only included a PDF version as we move more and more to a digital world. So if you are apportioning your membership benefits, so the subscription is split to reflect the actual underlying benefits, then the opportunity for zero rating being attributed to digital versions is good news, because you should be looking at your membership benefit package and extending the zero rated to the elements that are digital versions. And we've been doing this with a number of clients, and this was last year and ongoing. That subscription, it may be that it's as by way of extra statutory concession, or it could be just a matter of fact, something they call a mixed supply, so where things stand on their own 2 feet. And then again, looking at the practical side, there's a change in the VAT treatment. So has the account receivable, your sales ledger, has the coding been updated to reflect it, to ensure that the right VAT codes are making their way through your accounting system and feeding in to the ultimate position of what you owe to the HMRC and what you can recover. If you could click through for me, please. So, as been mentioned by Geraint, the EU e-commerce package. So just to put it into a bit more context, as you're all aware, for many reasons, from the 1st of January this year, the UK finished the transition period for Brexit, and we are now what's called a third country. We're not in the EU, and anything to do with EU-related provisions does not apply to us. And you may be looking at goods. I mean, a lot of the work we've done, just going in a little bit wider, has been supply chain management, perhaps for B2B, for businesses who are now finding that they can't benefit from what were the accommodation, the easements to allow free trade for movement of goods around the EU. Now, the EU e-commerce package, the changes that Geraint referred to, were due to come in on the 1st of January this year, but for a number of reasons, they were postponed until the 1st of July. So for the VAT practitioner, this has been a world of change this year. So you're just picking yourself up after dealing with one lot of changes, and lo and behold, there comes another. And what we're seeing, the key impact of these is that it's essentially there to tax B2C transactions at the point where the customer is based. So it's looking to put the VAT liability at the place where your customer is physically located. And what does that mean? Well, as Geraint mentioned, back in 2015, if you were selling digital things, digital products, then you were looking at the mini one-stop shop. So, for example, I had a client that was selling digital versions of their publications all over the world, including the EU, and they were VAT registered under the MOS, the mini one-stop shop, which meant they only needed one VAT registration, which was in the UK, and they collected the different VAT amounts from their customers, their B2C customers all over the EU. So different VAT rules, different VAT rates, and they would put that VAT all on this MOS return. This year, we are not in the EU. The MOS, the mini one-stop shop, ended in January, and the full ramp up to the EU e-commerce package came in on the 1st of July. So what does that mean? Well, that means if you're selling, and the one-stop shop, the OSS, goes wider than what the mini one-stop shop was. What mini one-stop shop MOS only applied to digital, the OSS goes further, and it's essentially, if you're doing B2C sales of services and some intra-EU distance sale of goods, you need to have a VAT registration, an OSS registration in another EU member state, because you can't have it in the UK. We are not in the EU. And we've been doing some work around that with our wider more network, because obviously we've got VAT people all over the EU, and they've been helping and taking on client responsibilities for effectively reinstating what was MOS and the wider issues that we are now experiencing. You'll also see something called the IOSS, the Import One-Stop Shop. And what that is for if we're selling goods from the UK, i.e. a non-EU location, into the EU to the B2C, the B to private consumers or equivalent customers, and it's low value, less than 150 euros. You have to register for this IOSS, charge the VAT in the country where your customer is based. Now, we are finding what the extra complication there, and I'm sure you're finding this complicated enough anyway, is that the EU member states, what they are asking for, and we've not found one that isn't asking for this, is that you have to appoint a local fiscal representative in order to meet the registration requirements and to effectively help you and do your legwork over there. So not only is that extra admin, that's also extra cost, because these people are not going to do this because they take on a joint and several liability. They're not going to do this without proper remuneration and to cover their risk. So if you're selling publications, if you're selling low value goods, maybe some gifts, that sort of thing, low value goods, you are potentially covered by this Import One-Stop Shop. And indeed, we've actually had situations where clients have decided to stop selling to the EU because it's just not worth their while because of all this extra administration. And that final bullet point there is talking about the special rules for online marketplace. So what we're finding, both if you're buying from an online, if you're using an online marketplace, Amazon is the obvious one that always comes to mind, then there are special rules where the online marketplace takes on the responsibility for the VAT, and they will then require you as the actual seller to work with them in how you achieve that. So the EU e-commerce package is complicated. I think it's fair to say that. But the key thing to look at is who does it apply to? It's where you're selling in the EU member states and the status of your customers is B2C. So not businesses, not B2B, but B2C. Molly, next slide, please. So what can you do if you're in the UK scheme? There's something called the non-union OSS scheme. So this is where you're not set up for VAT registration in the EU. And this is, again, can replace MOSS. We found it's more likely that somebody will set up on the EU continental mainland, they will look more at having a EU registration under the OSS, the one-stop shop, which is, sorry, it's all similar, but it's also very different. But the key point to take away there is you may need a VAT registration in the EU. If you're going to need it, where are you going to set it up? And we've been talking to the various more network and about how that can be achieved. And what will that mean for you at a practical level? Because let's be honest, you're busy people. What is the easiest way? You're almost like, what do I need to know? When do I need to know it? How am I going to get it done? So please bear with us. We've been working our way around this as well. So there's been a year of quite major changes with the Brexit in the earlier part of the year, and then more recently from July, the EU e-commerce package. Unfortunately, these things are not optional. These changes have to be adhered to. And unfortunately, although it's a lot of terminology here, you need to get to grips with it. So next slide, please. And I think it's back to you, Geraint.
It is indeed, Debs. Thank you very much. So as I said, I thought we'd have a look at some of the things that HMRC have done to address some of the perhaps foreseen and some of the unforeseen bits around what's happened over the last 18 months. So we're going to start with a business brief that HMRC issued a few months ago now, which was a response that they published to several papers and several submissions by various organizations around the impact of the pandemic on partial exemption methods, and in particular that the changes in income and funding and activities resulted in partial exemption methods that have been in place in some cases for many years, and had always produced a fair and reasonable answer. And just to circle back at that point, remember that for both partial exemption methods and business non-business methods, the calculations are not about producing an answer that is correct in terms of, yes, it has to be arithmetically correct, but it's not about producing a scientifically provable answer. It is about producing an answer in terms of VAT recovery that both parties, HMRC and the taxpayer, acknowledge and agree to be fair and reasonable. And what a number of people were pointing out is that changes foisted upon them, forced upon them, whatever words you wish to use, by the pandemic, had impacted their VAT position significantly and had made a partial exemption method that was happily fair and reasonable before no longer fair and reasonable. So, for example, I have a client whose partial exemption method in no small part is based on the number of people attending various exempt education courses they operate. Clearly, over the last 2 years, over the last academic year and a half, the number of people physically attending those courses has dropped essentially to zero. Most of those people are now attending online, which means that the cost profile associated with that exempt activity is very different. So my client is no longer looking at hiring premises, for example, to run courses and workshops and all the rest of it. It's now doing everything by Zoom, so the cost base has dropped dramatically. It's also had to adopt a very different business model in terms of how people pay for these courses, because it found out that people were not wanting to pay for, a lengthy series of online events. They might either pay as they use or else want the ability to drop in and drop out. So for them, we've had to look at negotiating a new partial exemption method. So business brief 4 of 21 was essentially customs accepting that for some people, there is a need to review their partial exemption special method, or indeed their use of the partial exemption standard method, because it no longer produces a fair and reasonable level of recovery, and essentially agree a temporary alteration or a temporary suspension of those methods to deal with the impact of the pandemic on VAT recovery. Now, what is interesting is that the same points have perhaps an even bigger impact on business, non-business relationships or methodologies. So, for example, we've got an awful lot of not-for-profit organizations whose business, non-business calculation is essentially an income-based calculation. So historically, people have looked at the value of grants and donations they've received as their non-business income and used that as a substitute calculation for VAT recovery. Well, those organizations in some places have now had significant grants either from the government or from other parties, or from the government and other parties to support them through COVID. You've seen furlough grants, you've seen COVID support payments, you've seen various industry initiatives, etc., etc. And a question has arisen, well, how should those be treated? If you put those into a business non-business calculation, you will very often see a very, very significant increase in the level of non-business VAT, i.e. a reduction in the overall recovery. The other thing we've seen is activities, and I think presentations are an excellent example of this, which used to be business, have now become, or at least in customs' eyes, have become non-business. So I think we all know that people are reluctant to pay for online content. It's harder to get, to use the modern vocabulary, it is harder to monetize online content than it is physical face-to-face sessions. So I've got a number of charity clients who used to run various seminars, conferences, etc., and they would traditionally charge a delegate fee to attend those events. They are now running those events online and are telling me that the market dictates that those things are essentially free or entirely free. Now, all of a sudden, that means that what was in some cases a taxable activity, because it wasn't education, for example, has become a non-business activity. So again, there is a direct impact there on their business, non-business methodology, and something different to think about. The same is true of certain publications where historically people might have paid perhaps a relatively nominal sum, but will have paid for an update or a magazine or a newsletter or something. That content is now being generated electronically. And again, people are looking to get it for free. And something moves from a business activity to a non-business activity. I think we're seeing this with a number of charities already, where HMRC are pushing back and suggesting that methods are not fair and reasonable. Now, what's interesting is that HMRC have, apart from a passing reference in that business brief to so-called combined methods, we're getting HMRC looking at business, non-business methods in light of what you might call a temporary change to that operating model. But I think the next point is interesting. Talking to a number of my charity clients, people are looking at this as both an opportunity and a threat. And I think people are seriously considering new operating models, which, as I said, I've called the move online. People are looking at doing things in a different way than they've done them historically, using technology to maybe reach out to their beneficiaries in a way they've not done in the past, which, particularly if you're looking at a model which doesn't charge for something that historically you charged for. And part of the logic for that is, so I'll relay a conversation I had with one of my clients about a week or so ago. So they historically would have had a series of meetings dotted around the country aimed at providing information and support to their particular user group. They are a medical charity for people who suffer from a fairly common long-term medical condition. And they used to hold what they described as road shows dotted around the country. And they used to charge a fee. We're talking about, I think it was, if memory serves me right, it was £5 a head to attend those events. The view of the fee, frankly, not being to make it a profit-making event, but more to encourage people to attend, but also to try and at least defray some of the immediate costs. But that meant that that was a business activity for VAT purposes. They got their VAT back on their costs, so hiring the room, advertising, hiring a speaker if that was relevant, whatever else it was. Those events have now moved online, and that particular charity tells me that they believe they will stay online. They are now free at the point of delivery, because that's the model that particular charity believes is right for them and for their beneficiaries, which does have a knock-on impact on VAT recovery. Now, I'm not saying that that charity has made the wrong decision in terms of its operating model. It is simply perhaps the law of unintended consequences that move online and the change of their operating model will result in them losing not huge amounts, but a number of thousands of pounds of VAT per annum. The other thing, which perhaps is not directly out of the pandemic, but I think does circle back to the pandemic, is about a year ago now, HMRC issued a business brief on the back of 2 European court decisions involving telecommunications companies, one in Spain and one in Portugal, which looked at the VAT treatment of compensation. Now, historically in the UK, and to be fair, the rest of Europe, compensation payments have largely been seen as free of VAT. However, these 2 European court cases looked at the, and I'm not going to, let's call them penalty charges rather than compensation. They looked at the penalty charges that mobile phone customers paid for basically wanting to exit their contracts early. And the mobile phone companies in Spain and Portugal, and indeed in this country for that matter, had always treated those payments as not subject to VAT, as compensation. But the European Court said that no, actually it was extra payment for the telecom service and therefore standard rated. And HMRC followed that up with a business brief in 2019 saying that if you've got a contract and the contract contemplates that somebody will make these sorts of payments, then it's not compensation, it's taxable by reference to whatever the underlying supply is. Now, the reason I put this in here in terms of the pandemic is what we are seeing across the piece, both in the not-for-profit and the for-profit sector, are various compensation payments. And again, I'll use that word generically, being made to people by, for example, their landlords or some of their suppliers or some of their key players, where there has been some sort of loss as a result of the pandemic. So I've seen payments being made for unsaleable products, for example. So I have a charitable client that sells, it's not food, but it is a perishable product. So I have a charity that sells a perishable product, which they simply couldn't sell because of the restrictions of lockdown and because the difficulty in getting the stuff out and getting people into offices and all the rest of it. They, a supplier, very kindly offered them a payment of compensation in part to defray the cost of unsaleable stock. And the question arose as to whether or not, following the cases I referred to above, that was compensation payment and therefore not subject to VAT, or whether it was a standard rated payment for the goods. The other one, which we're seeing quite a lot of, and is one that is causing great concern in parts of the property sector, is you have tenants, and I include charities within that, who are looking to exit leases they no longer want for office accommodation they no longer use or no longer use in full. Now, again, historically, those sorts of payments to get out of a lease early would typically have been seen as compensation to the landlord for the loss of his future income, and therefore not subject to VAT. Following the two cases I referred to earlier, HMRC believe those sorts of payments should now follow the liability of the lease. So if VAT was being charged on the rent, those payments would be subject to VAT. I've got a couple of charity clients who are at the moment in negotiation with their landlord to exit leases early because their office accommodation is either in the wrong place or too big, or they've decided they don't need an office at all in some cases. And that is a significant issue for those charities. So as I said, it's not directly a pandemic issue, but it is one that has some relevance for people who are looking to change their business models or change their accommodation plan on the back of the pandemic. So if we just flip through to the next slide, please. So just as a very quick summary, as always with VAT, there are lots of changes, lots of things going on. The devil is always in the detail, to use a very hard-worn phrase when it comes to these things. And I would encourage everybody that, if there is a question mark, if you're in doubt, if you're not sure, ask early, and please, don't feel frightened to talk to us. There are things we can do, but the earlier we're involved, the better. The more chances there are for us to tweak things around to get the right answer. And unlike other taxes, obviously VAT happens in real time, so there is a limit to what we can do retrospectively. And I guess the question that none of us know the answer to is what happens next. I think this will continue to be a work in progress. VAT and charities will continue to be an area of significant complication and where changes are ever evolving. If we could just flip through, I think that brings the formal presentation to an end. We have a couple of questions looking at the Q&A box. Hybrid symposiums, yes. Oh dear, I was hoping nobody would ask this question, but there we are. So these are events which take place, as the name suggests, both virtually and face-to-face simultaneously. And I think the answer is that they are, for VAT purposes, in effect, two events. So if you have, this particular question is contemplating an event in Edinburgh and would be considered education and exempt in the UK. So if you have so that event has, let's say, 150 attendees, and let's assume, let's make it nice and easy for ourselves, 100 of them go to Edinburgh in person, then clearly the UK exemption applies for those 100 people, regardless of where they come from, who they are, and what they're doing. For the 50 who attend virtually, then you are back to the thinking of, well, this is a virtual event as far as they are concerned. So the first question is, are they business attendees or are they individual attendees? And if an individual attends from, let's say, Spain, then the question is not whether or not the UK exemption applies, but whether the Spanish exemption applies. Because the place of supply is Spain. Now, that can be a difficult question to find out. The national legislation is the place to go, which unfortunately is not very helpful unless you can read Spanish, and in that case. And even if you can read Spanish, I suspect it's not that helpful anyway, because whilst I wouldn't profess to be fluent, I can just about read Spanish, and I have tried to read the Spanish legislation and it doesn't make a lot of sense to me. I think in practice, you would need to seek professional advice from our colleagues in Spain, or whatever it is. I will be entirely candid. I do know of organizations who have taken the view that they can rely on the UK exemption, which is technically wrong, but I can understand how you can get there. It's not something I would recommend, but I do know organizations who've adopted that particular approach. But the correct answer is yes, you would need to look at the laws in the country of residence of the individual attendees. The other point, and just to hammer this home, there is no registration threshold at that point. So the registration threshold effectively is 0. So, one person attending from Spain gives you potentially a liability to register under OSS and account for VAT. I mean, one of the things that we found with Moss, which, as Debbie indicated, has been going for about 5 or 6 years now, is that you often have people registered for Moss who were using it to account for tiny amounts of VAT. I mean, I had a client who registered for Moss, and I remember looking at one of their returns, and the collective VAT bill across all 29 member states was under €50. It was absolutely ridiculous. The amount of admin involved was massive. The other thing I would say, and I don't wish to be seen as the bringer of bad news here, but the costs and timescale of registration in some EU member states is significant. If you do need to register for VAT, the problem is
as well, of course. Yeah. I mean, I think as well, one of the things that strikes me a bit, Brexit and certainly the EU, the e-commerce directive, is proportionality. Is, as Geraint said, you've got a huge amount of admin and potential legwork to do, but it doesn't scale up or scale down really in a meaningful way based on what your exposure is. So you could end up having all that admin and all the responsibilities for fundamentally very, very small amounts of sales, maybe. And yeah, it might be, I certainly have got clients and contacts who said it's just not worth it.
The other question we've got, which I think sort of goes on the last slide, which is an interesting one, is as we've seen a move away from certain activities being business to non-business because people are not charging for things that historically they've charged for, the extent to which there is a scope to revisit whether certain property that occupied by a charity now qualifies for a relevant charitable purpose relief, and therefore VAT is no longer due on the rent, for example. I'll be honest and say I haven't seen anybody who's breached that threshold in practice, but clearly it must be possible if you have an organisation that has moved significantly from a fee-paying model to a grant-based model, for example, or where you have where you have a building that historically had been used for face-to-face courses with people paying to attend and is now being used for, free-to-air webinars. It may well be the case that you have now got a relevant charitable purpose building, and the option or the opportunity exists to perhaps no longer pay VAT on the rent. That deals with the questions we had asked during the event. It's about 5 to 5. Unless anybody else has anything else to add, then unless you want to say anything else, Debs, I think we've sort of reached a natural break clause, haven't we?
If we click to the next slide, and then you'll see the details for myself.
That.
Yes, all right. For myself and Geraint. So yeah, if you want to, I would say the phone is not the greatest way into this day and age of contacting us, but emails, great. Drop an email if you've got something that we haven't covered, or there's something that's bothering you or whatever, then yeah. I think I'm probably slightly less busy at the moment than Geraint, so I may be living to regret this, but drop me an email and I will respond to you so I can find out. But what we would like to know is if you could come back to us with feedback with regard to this, what you maybe other events that we could run on VAT, and also more importantly, I think we would like to know, myself, Geraint, and the business and PD team, is what's your appetite for in person and what's your appetite for online? Really, I suppose picking up the theme of the first presentation today, because I, as Geraint said, I spoke at the finance summit, and that seemed to be really popular for people coming along. But obviously this makes life easier for you. So we really are interested to know what your thoughts are, what you want, because obviously the more we know about your needs, the more we can bespoke the content of what we do and how we do it to reflect that. And as I say, if there's something we haven't covered or something that you want that you'll go away and reflect, drop me an email and I will make time to get back to you. And obviously Geraint's got to be brave because he's got to have a big injection in less than an hour. So thank you, everybody.
Thank you, folks.